If you've been considering buying or selling a home in Frisco, Texas, or the immediate surrounding areas, then the latest headlines about mortgage rates and home prices might have you taking a pause or at least wondering what in the world is going on. Well, if that sounds like you, then you're in the right place because in this video, I'm going to dive behind those headlines and show you exactly what's happening here in the Frisco market and share the information that you need in order to make the right decision for you and your family. So let's dive into that right now. You may recall that just a couple of years ago, we were inundated with headlines forecasting doom and gloom for the housing market. Prices were going to tumble, the bubble had burst, everything was going to come crashing down, and it didn't happen. And I'm not saying it should or shouldn't have, but what I did want to do today is kind of dig into those numbers and understand why it didn't happen. And first and foremost, it's important to understand that falling home prices are like a symptom, right? They're the after effect of what happens. So what in fact would need to happen for home prices to fall? Because if you've seen any of the videos I've done before, then you'll know that home prices themselves are simply a matter of what's going on in any given market between supply and demand. Now, when those forecasts were made, the expectation as mortgage rates rose rapidly was that buyer demand would plummet, it would fall. And that's exactly what happened. It did. Buyer demand fell. But the flip side of that was the expectation was that the number of homes for sale supply would also keep going up. And it didn't. That's the part that threw all the forecasts in a loop, so to speak. It didn't happen, but it makes sense as to why it didn't happen when you think about it. If you're somebody that has a mortgage that's locked in at say 3% and rates jumped up to almost 8% or right at 8%, why in the world would you sell your home and go buy another unless you were paying cash or unless you absolutely had to? And the answer is you wouldn't. It became known as the lock-in effect. The housing market was stuck, if you like, due to the fact that so many homeowners were locked in to their current mortgage rate. Now, it played out differently in different parts of the country. Now, here in Frisco and the surrounding areas, as we all know, we are absolutely inundated with new construction. There's new construction going up everywhere. And that new construction is one of the reasons it's been, if you like, somewhat of a saving grace for our market here. Now, let me explain. If we didn't have the new construction that we had here, we wouldn't have seen any change in prices in Frisco. We would have seen continued growth. And the reason for that is the number of people moving in, the amount of demand there is for homes in this area relative to supply. Demand still exceeds it, so it's forced pricing up. Now, things had gotten a bit better in the late part of 2023 and during the first couple of months of 2024, but you may have seen that mortgage rates have started to rise again. We dropped down into the 6s, now we're bumping up over 7 again. So what in the world is going on? And what impact is that going to have going forward? Well, as it turns out, the economy has been much more resilient and stronger than many people expected it to be. And the economic reports coming out have basically caused interest rates to go back up. Now, it was widely expected and thought that there would be approximately, or what the experts, the market experts, were forecasting this year. When you look at the Wall Street guys and everyone that's following that, they were calling for up to 6 federal rate cuts this year. The first one being this month in March. That is obviously not going to happen. The Fed has said that they will most likely cut rates this year, but not now, right? Not yet. The inflation numbers are getting closer to where they want, but they're still not there yet. So those forecasts for how many rate cuts the Fed is likely to have this year has dropped from 6 to 3. As a result, mortgage rates have been stickier than what was expected. Now, what does that mean for us here in Frisco? And what does that look like as far as pricing goes going forward? Well, again, we're in a little bit of a unique position here because of all the new construction that we have and because of how rapidly this area is growing. I can tell you that over the past 2 weekends, I've been out at multiple new home communities and it has been absolutely slammed. It has been like a traffic jam. It's a parking lot in front of them with how many people are out looking. And I tell you what, every single time those builders are releasing a new phase, they're raising price. Nothing is changing. There are still interest lists in many of the communities, which is something that you might not expect. Now, the one advantage that the new construction homes have is that they've been offering some substantial incentives to either buy those rates down to keep sales moving, or when you consider the fact that from the date you sign a contract with a new home builder, it's going to be roughly 8 to 12 months, depending on builder, before that home is actually delivered. So many buyers in that case, if you like, they're hedging their bet a little bit that those mortgage rates are going to come down. It is still widely expected that if things play out as they are supposed to, that we should see rates back to around 6% by the fourth quarter of this year. Will that happen? I don't know. I honestly don't know if it will happen because the fact that they thought rates were going to fall further than they have here in the first quarter, and it hasn't happened. But the one thing is here is many of the headlines that you see and hear are not describing what's going on in our local market. So let's go back to inventory for just a second. Inventory in Frisco hasn't climbed like it has in many areas of the country. Nationally, inventory is up 19% year over year. We're not seeing that here in Frisco. I'm going to share my screen and show you exactly what I mean and give you a better idea of what we are likely to see here in the months ahead. All right, so what we're looking at right here is from my weekly market report. Now, if you'd like to get a copy of this market report, you can. It will be emailed to you each and every week. There is a link in the description below that you can sign up for it. And if you don't want to receive it for Frisco, you can use the search feature at the top of this report and get this exact same information for any city or zip code in the entire country. So what we're looking at here is just the 7-day trend line. Okay, and as you can see, over the far right side here, inventory is ticking up a little bit week over week, but it's not massive growth. I mean, go back to where we were at the beginning of March 2022, and you can see that we had this massive run up in the number of homes for sale. We are not seeing that right now. As a matter of fact, if we turn the 90-day trend line on, you can see that the 90-day trend line is actually still falling. So what's interesting here is it remains to be seen, where are we going to be in our spring market? Is the fact that rates are ticking up a little bit going to stop those sellers from putting their homes on the market as it has in years past? And are we just going to be relying on new construction? If so, we can expect prices to continue to go up. If we see a sharp upturn in the number of homes for sale, that could help keep prices at bay. Now, if I flip over for just a second, we look at the impact on pricing. What we're looking at right here is what the median sales price has done in Frisco. And you can see it's been a yo-yo. It's bouncing up and down. This is looking at it across all construction types. So year over year, right now, we're up 3.6%. But here's the thing that's interesting. If we look at just the resale market, it's very different. Median sales price is actually up 16.5% year over year as of February. So why the big discrepancy? Well, right here, new construction. Now, you see a sharp drop off here. I'm just going to tell you, don't get excited. New home prices are not on a hard, steady downfall right here. Yes, they trended down through most of 2023 before recovering in October, staying that way through January. And then you had this massive drop off from January to February. Why is that? It's really quite simple. In new construction, as I mentioned just a minute ago, it's taking 8 to 12 months for a property to be built, delivered from the time a contract is signed. So those properties that closed in February of 24, those contracts were signed anywhere from last March all the way up probably through June. You're going to have a few quick move-in homes thrown in there as well. So that is a very long look back window with regards to those new construction properties. Again, I can tell you that the price of those properties right now, where they are trending on the ones that are currently getting closer to being done and released, is trending back up. So we're not seeing a massive drop off. But when you average those two numbers together between new construction and resale, that's why you're seeing for all construction types only a 3.6% increase. So right now, the bottom line is it really depends on where interest rates go. If interest rates continue to climb, I expect that we're not going to see an uptick in new listings that we usually see this time of the year. And there is still enough demand in this area that we're probably still going to see prices inch up. You're not going to see massive multiple offers that you were seeing a couple of years ago. Like I said, many communities still have wait lists, and there's a lot of people that are still interested, even at the higher end. I was in a model the other day that was priced at $2 million. There were 9 sets of people in the model looking, and 4 people in the sales office asking what lots were still available. So again, across all price points, it is remaining busy. Now, if you have questions or you're considering making a move this year, I invite you to reach out. My number's up on the screen. You can schedule a call with me or send me a text message, and let's talk it through. Let's do a consultation and see what it is. Let me know what you're looking for, and I can point you in the right direction to a builder and or community that might be right for you. Or if you're looking to sell based on current market conditions, when the optimal time to put your home on the market will be in order to maximize the trends that we're currently seeing. And if you found value in this video today, I invite you to go ahead and hit the thumbs up, like this video, subscribe to this channel, and make sure that you stay tuned for one of these videos coming up next.